Figuring out pricing for a new launch can be kind of tough, so let's try to simplify it a bit. For most businesses, if you're having your product manufactured by somebody else or you're buying it wholesale, you're mostly going to be concerned with the materials, the packaging, and the shipping costs. If you're doing your own manufacturing, it can get a lot more complicated because you're going to have to take into consideration things like labor and overhead. Do the best you can, but if it gets complicated, you might need the help of a CPA. Essentially, once you have all those numbers, you want to add them up to understand how much does it cost you to be able to produce one additional unit. The next thing you need to decide is what sort of a markup you're going to put on that product so that you have enough gross margin from your sales to be able to cover all your other expenses. Let's say you're selling a t-shirt that costs about $10 a unit to make. You might mark that up by 5x so that you're selling it for $50. Your gross margin per unit would then be the $50 sale price minus the $10 of cost, which is $40 per unit. That $40 that you make per unit sold is necessary to be able to pay for all your other expenses, like the rent for your office, your payroll, and advertising expenses. If you know how much all those other expenses are, then you can also figure out how many units you need to sell to be able to break even, as well as how many units you need to sell to be able to make the profit that you want.